do maybe we're going to do a payroll tax cut. We're going to help businesses who are in trouble because of this. Wouldn't that have just as much of an effect, if not a greater effect, than having the Fed cut rates by, I mean, there's almost going to be nothing left to cut if they go this route. And even Goldman was saying if they do, it's not clear it would work.
Yeah, well, I do think it would ease financial conditions. It's something you can do immediately. I think a lot of the things that the administration could do would take some time. I do think there's a role to play. We looked at 9/11 as some proxy. There's no perfect analog. The economy is already in recession. And I think if you look at the kind of post-mortem on what worked, what allowed that to be a relatively short-lived hit to the economy when you shut down transportation, you shut down the financial markets, was a coordination of both fiscal policy and monetary policy. But monetary policy actually was credited as having the most immediate impact. And so it's not a cure-all, and I can understand why the Fed doesn't want to ease, because I think at this point, more easing could do more harm than good absent the coronavirus. Given the coronavirus, though, it seems to me there's very little risk of them over-easing.
Brian, I thought it was interesting, your views on this market, where I wasn't sure how to feel about one of your picks here being a debt collector. I mean, talk to me about what you think the economic impact will be of coronavirus and where you think investors should look for opportunities.
Certainly. So obviously we're looking at relatively unprecedented circumstances with the coronavirus. It will get much worse before it gets better. And so we expect that we're probably in for some short to intermediate term economic pain. But at the Hennessy Focus Fund, we try to take a very long-term view in investing. And so what we're focused on in an environment like this is not trying to predict the direct economic impact in the short term or market impact, but how are our businesses going to fare through this environment and what does their long-term prospect look like? So we're reanalyzing, okay, what do our balance sheets look like? What's the persistency of revenue growth and demand at the businesses we own? And importantly, what does the supply chain look like for these companies? And so we've got a handful of companies that we think are very well positioned for what might be a difficult economic time, or also pretty well positioned if things pass without much pain.
And those include Encore Capital, that's a company I mentioned a moment ago, American Tower, the cell tower company, O'Reilly Automotive, which is an interesting play. But my sort of final question to you, Brian, is would you then, looking through these companies exactly the way that, thorough investors should be looking through them, would you prefer to see a monetary response here or something that could be more targeted in terms of a fiscal response? What do you think would be best? What would make you as an investor feel most comfortable going forward?
Well, I think that it's important to recognize that we're still relatively early in the unfolding of how coronavirus is going to play out in the U.S. and globally. And so I would be hesitant to rush forward too quickly with a strong fiscal or monetary response. In fact, I think that too strong a response, too much alarm might cause more damage than it does good. So I would be measured in my pace of response.
All right, we have to move on. But, Jason, before we go, how much of today's rally is because Biden won in South Carolina and maybe took away some of Bernie's momentum?
I have to say, Kelly, I don't think it's that much. I think it has a lot more to do with the G7 call that's going to be tomorrow and an expectation that there's going to be some coordinated response among the G7 countries. But,
so there better be at this point.
There better be at this point. And then tomorrow we have Super Tuesday. We'll see, if Mr. Sanders wins, we'll have, another something else to worry about.
By the way, Jason, what response are we talking about? I mean, now that central bankers are going to be on the call, are people looking for a coordinated global cut, or is some kind of statement going to suffice?
I think competence and confidence, along with the passage of time, would do wonders. I think there was certainly a little bit of a sense of panic last week. I think central bankers and policymakers, generally speaking, have done a pretty good job thus far. But I think just some sort of sense that there's vigilance about what's happening in the financial markets would go a long way. So I'm actually hoping for a cut. But I think a strong statement would probably suffice for now. Then people will be worried about the Fed announcement later on this month.
Okay.